What's cool is like, everyone talks about value add turnkey, right? It's this whole like, these are the only paths, but really it exists on kind of a
hybrid's
spectrum.
good. Hybrid's
Right.
good. Yeah.
We should do a whole episode where we switch seats, maybe metaphorically. We don't have to actually do it, and I'd love to talk to you about this more.
Welcome back to REI Hot Seat. Andrew Hines here with David Holshoff for yet another week of deal review.
Yeah.
Last week we did 2. This
busy.
time we've got one purpose-built building that I'm looking at on the screen here that we're going to be reviewing. Also know nothing about it.
That's the right way to do it.
Yeah.
So every day is a surprise for you.
Yeah.
It's kind of nice.
That's how I always did the podcast. I knew nothing about what we were going to talk about, what deals we'd dig into, and that's what made it fun.
I hope that we maintain it being fun for you.
All right, so Victoria Road in Guelph.
Yeah. Not our listing.
Okay.
Just want to talk about it. 15 units. It's got 21 parking spaces. VTB is an option. We didn't model that out. I don't think that's the route. Show you some of the photos. Really nice looking building.
So another brick building and sloped roof if you like that.
I love that.
Yeah.
I hate flat. I have a flat roof on my house.
Yeah.
I hate it.
Flat roof is concerning.
It's so
I mean, it just seems like a problem waiting to happen.
It's infuriating.
A roof that drains naturally, just automatically is a good
I got
thing.
an idea. I'm going to let the water just sit there.
Well, they have roof drains, but
I
you still
know.
have the
You get my
opportunity for
point.
ponding.
Yeah.
It always was concerning to me.
This is nice.
Yeah.
They love that. Looks like the balconies are newer. Large units, which we'll get into. Some of the units are reasonably
like another
refreshed.
like 50s, 60s build back in the golden era when people
is just
built
how
things
they did 'em.
monstrously.
Yeah. Decent laundry room. What are those?
Boilers?
I don't know what those are.
Yeah, what are those? It looks like each one looks like a boiler. That wouldn't be right.
Okay, maybe it says in the listing. Anyways, we won't bore the listeners, especially the ones listening, what that is. So we'll jump into it. Ready for this? All 3 beds.
Oh, wow.
We love that. I have this theory, I don't know, but they made so many micro units, especially in Toronto, right? Small studios, 1 beds.
Yeah.
That's where you're seeing like the real kick in the teeth, especially on the studios, where 3 beds, they don't really make a lot of 3 beds on any of the new developments, the new builds.
Yeah.
So if you look at like kind of the rents in comparison, some of the townhomes and house rents have, while they've dropped a bit, they've stayed a little bit more stabilized than the smaller on a per square foot basis, because you times are tough. You got to sell your house and you want to take your family.
You go to a 3-bed.
Go to a 3-bed, right?
Yeah, and the 3 beds are also going to attract those people who are multiple families live in the same unit.
Yep.
Not that you want that in your units, but it will happen.
Yeah,
It's happened to me.
It's not ideal. Bit of a fire hazard, but
You got a couple of 1,200, 1,300 there.
Yeah.
Like so, a lot of lower rents on these 3-bedroom units. What's the highest one?
I don't think this is correct. Like 2,100 for a 3-bed seems light, just unstable value. But anyways,
But maybe because Guelph should be reasonably high.
I thought so. So we'll go with it. In any event, so 3.5 is the list price. I've got it at $3 million.
Okay.
That might be a little aggressive for 200 a door. It's a 5.6 cap for all 3 beds.
Right.
The price per unit gets a little skewy with 3 beds in comparison. Laundry income, parking income, and then expenses down here. So same story. Send it off to CMHC.
Right.
See how it looks.
And then every time you get a turnover, you're happy.
Well, that's it, right? Like, so $3 million purchase price. Loan size is about $2.5 million.
Mm-hmm.
Down payment is $510,000. Land transfer is about $60,000. I build in a lender and a broker fee, right? So lender, obviously people giving money. The broker is the one coordinating the loan. Closing costs, or legals, reports, all that. And then CMHC application fee. So you're looking at about $650,000 to do this deal.
Right.
You could probably go to 84% loan to value at 4.5 interest. You're hitting it. Now,
You got to hit 1.2, right?
1.2 on a 10-year. Yeah.
Okay.
Now, because the loan's going to be $2.5 million, it's probably going to be closer to 4 to 4.25. Like if it was today, you'd probably get 4.
Is it that good with CMHC?
Yeah. Here, you want to look? So, depending on where money is and how much spread there is, typically you'll see different spreads between a 5 and a 10-year. We're talking about a 10-year right now because if you go to a 5-year, you need to hit a 1.3 debt cover.
Yeah.
Okay. So we're looking at a 10-year. 10-year Government of Canada yield right now is 3.46.
3.46, okay.
Then they're going to build a spread. So if it's a smaller loan, they're going to build a bigger spread, obviously.
What's this typical spread you see?
Like a good number to use is 1%, just kind of across the board.
Points?
Yeah, 100 basis points across the board. Now, as we get to a size of, 2.5%, 3%, they're going to bring that number down. So you're probably like 50, 60 basis points. So
you're saying 2.5 million.
2.5 million.
Yeah, okay. So then they bring it down. Okay, they only want a 50 basis point.
Yeah, like $2.5 to $3 million deal, you're probably like 50, 60 basis points, which would be 4.1, give or take.
4.1. Okay, so for context, they're always deciding, like bond rate is the dictating factor for lenders to decide, are we going to put money into bonds or are we going to put it into something more risky? What premium do we need to get? In this case, because it's government guaranteed, they're basically taking almost no risk, so it's more of like an administrative premium.
That's exactly beautifully said.
At like 60 basis points on a really big loan or 1% on a smaller loan.
Yeah.
So that's the benefit with the CMHC program.
100%.
And in the U.S., I'm assuming with Freddie Mac and Fannie Mae.
Fannie Mae.
I've never looked at their interest rates on those programs, but it's a similar idea to what.
And
CMHC.
I wonder, do they, because like in their mortgages, better, they're for the whole life of the loan, right?
They don't have to be.
You
can do, commercially you can do a lot of 5 and 10 years as well.
Could you do like a 30?
I believe you can, yeah.
Wow.
I don't know if you can do it with the agency loans like that, but
got it.
But yes, you can certainly do it with commercial. You can still get 30s, which is wild.
Imagine
and cool compared to.
Do you lock in 2.5 for 30 years?
I mean, it's just their yield is so much higher in the U.S. right now.
Right.
Yeah, they're still doing rates in the 8s.
Yeah, I know a guy who a friend of mine bought a house in California and it's 7.1%.
Yeah, it's way different right now down there.
That is not what we're seeing out here.
Yeah, I mean, maybe that'll change in the fall, but they're talking about rate cuts, but that's on the policy rate.
Not in September, right?
Yeah. There's a lot of forecasters pricing in rate cuts for the end of the year.
Yeah. So if we look at the 10-year at 3.46, call it, with the spread, we're 4.1. So, we could do 4.1, 4.25. I like to build a little bit of a cushion because it is always moving.
Yeah.
Right? So 4.25. So then this deal starts to make sense. So if we go backward just for a moment here, let's put it back to 4.5. Just want to highlight something I don't like. 610 in, $610,000 capital required. I like that. It's a reasonable barrier to entry. But this is the cash on cash number. That's a little bit of a challenge.
Does that say 3%?
Yeah, it says 3.68.
Yeah.
So I don't love that. And again, this is at $3 million on a list price of 3.5. So, but again, we're 4.25 still builds enough buffer. I think that's a fair number. So that puts it at about 4.45% cash on cash.
Right.
We're at a 1.25 debt cover. We're looking pretty good. The OPEX is at 41%, which is pretty high.
Okay.
So there's probably some inefficiencies here somewhere.
High relative to low rents, though.
Yeah, the rents are. Yeah, I guess in comparison, some are pretty low.
Probably more rent driven than inefficiency driven.
Fair. Yeah, because some of these are $1,200 when it should be $2,100. Yeah, that's a good point.
Part of it, right?
Yeah, there's even one that's $2,300 here. So, fair play. Yeah.
Yeah. So maybe some inefficiency, or maybe just get those rents up. And I mean, it's that classic thing. Like you said in the previous episode, it's just like people are a little off put by trying to turn tenants over right now.
Oh yeah.
The anti-landlord sentiment in Ontario really went on steroids over the last couple of years.
Yeah, they shook that out
people.
Quick. Eh?
Soured some people.
Yeah. So, but what's cool is everyone talks about value add turnkey, right? It's this whole these are the only paths, but really it exists on kind of a
hybrid's
spectrum,
good. Hybrid's good. Yeah.
And this one's it's a little bit more on the value add than the turnkey position. So if we can pick it up and send it to CMHC, or cash on cash not going to be great out of the gates, but look at the upside. This is at $2,100 a month rent.
Yeah.
It's $5.1 million.
Yeah.
Right.
It's a huge lift.
Huge.
And we were
lift.
looking at one last week with huge lift. So
Yeah. So this is you could go to CMHC, be happy, get the lift over time, go and refinance with CMHC, strip some capital out and recycle.
Sounds like a pretty darn good, almost like guaranteed, nothing guaranteed, but almost guaranteed.
Yeah. That's why I'm so hyped
wealth
about
creation plan.
Yeah, that's why we love that's why a lot of these are send it to CMHC, get good debt. There's magnitude of other ways. Some of the more aggressive folks won't do that because they want to increase the value of the building before, right? In any event, send it to CMHC, cash flow positive, get that natural turnover. It's usually 10 to 15% a year on a building.
Yeah.
And away you go. You get mortgage pay down. Everything's great.
Yeah, absolutely.
It's the move.
Side note, I just think it's worth mentioning this. Just tied up a house in the States for a subject to $1,000 down.
$1,000 down. Yeah. Wait, before we go
our
here,
offer is $1,000 more than the mortgage amount.
what? Okay, well, first of all, I hear subject to. Is that some government subsidy stuff?
No. Subject to is when you buy subject to. So they deed you the land subject to, almost like you would do subject to an easement, but subject to the existing mortgage. So we don't convert the mortgage into our name. It's still in their name. We're just buying it subject to the mortgage.
Got it.
So we get the deed, but it's subject to the mortgage. And then once that mortgage is paid out, then that effectively removes the deed, the deeded subject to.
Got it. I was thinking Section 7 housing or something.
Section 8? Yeah.
Section 8.
Section 8's a different thing, but yes. Subject to is
so you got it accepted? $1,000?
They've accepted it. We have to decide if we want to proceed. But we're actually closing on another sub 2, like 11 grand down in Cleveland, Tennessee.
That's incredible.
Just kind of looking at the other thing, right? There's one strategy this is getting back to what would the active real estate guys start doing, right?
Yeah.
If you're not going to flip stuff, or if you're not going to flip to yourself, or do the BRRRR, you do stuff like this.
Yeah.
And just
so the plan
flavor.
is to do what? So you get this accepted. You got $1,000 in, subject to. What's the next step?
Just rent it out, cash flow.
Cash flow.
Yeah. That's our criteria. So we've been a little slow getting some of them, and also training our team up. But but now we're in a place where certain members of our team are good enough to find these, negotiate them, and bring them to us, and they're just what we want.
And that deal will cash flow?
Yes. Depends on if you want to finance your down payment, but if you're putting your down payment in, not the $1,000. That won't matter.
I was going to say,
that
one I got talking about.
That one I got to review still, so I can't speak on that one.
Okay.
The other one, yes, it cash flows out
the
of the box.
11,000 one.
Yeah, we put it, as long as you don't expect cash flow on your 11,000, like you're not financing it.
Yeah. So you throw the 11,000 down, you're going to cash flow positive.
Yeah.
And you effectively
25 years left on a mortgage at 2.25%.
And what's the house value?
That one's great. It's worth like 220. We're buying that one for 150. No, 177. I'm confusing up my.
And where's that one?
That one's the Cleveland, Tennessee.
In Cleveland.
The other one, I got to look up where that even is. I just heard about it this morning.
Yeah.
I heard $1,000 down. I'm like, okay, that sounds great.
Cleveland, Tennessee.
Yeah, it's right on I-95.
Wow.
Not Cleveland, Ohio. So smaller town, right, sort of between Chattanooga and Atlanta, right on the highway. So
it's incredible.
Yeah, I like that. If you're right close to that main arterial highway, then
we should do a whole episode where we switch seats. Maybe metaphorically, we don't have to actually do it. And I'd love to talk to you about this more.
Yeah, it's just cool, different stuff, right?
Yeah, let's do that.
We will.
I bet you the listeners would be interested. I know I am. That'd be cool to learn more about that.
Yeah, and I don't know. And our listeners and viewers obviously comment. What do you want to see more of? Mm-hmm. We need to know because we just kind of get up here and we talk about what we're talking about. But it's an investment show, mostly talking about multifamily. But there's different stuff out there too. Yeah,
maybe people can comment. But if we're gonna do the reversal roles, I'd love to. Let's do it.
Cool.
Unless people say don't bother in the comments, then we won't do it.
And I don't know. They might. So, anyways, guys, if you made it this far, make sure that you join the Insiders list. If you haven't already, the link will be in the show notes or below this video if you're on YouTube. And that gets you access to Dave, Jake, and the team. Gets you on their sort of deal of the week stuff where you get access to deals that other people don't get access to.
Yep.
Certain stuff that we talk about on the show. And also, if you made it this far, show the channel some love and share this video with somebody.
We appreciate it. Thank you.
All right. Thank you. See you again next week.
Thanks, guys.